Hello everybody, this is Alan at Alan Talks FinTech. Today I'd like to talk about the end of 2019, my stock portfolio, and things that I did in 2019 related to investing. As always, please subscribe to my channel. If I helped you, click like, leave your comments below, give me some feedback. Okay, in 2019, I took a little bit different approach on investing. After the losses in the last quarter of 2018, I decided to focus more on dividend stocks. So in January 2019, there were a lot of stocks on sale. They were priced low, like AT&T, and the market was just starting to recover. So I started buying a lot of dividend stocks, and I listed some of them below. AT&T was below $30, down around 26, 27. So I bought a fair amount of AT&T because they had about a 6% dividend. Also, AbbVie during the year pulled back into the mid 60s. It's back up in the 80s now, but at the time that was a pretty good buy. I was also looking for kind of REIT type stocks, so I bought Arbor Realty. Recently, the Alliance Resource Partners, which is a coal company, went below $10 a share. Right now it's in the 11. They pay almost a 20% dividend. The price was going down because people are thinking they're going to cut the dividend. But at one point it was down in the $9 range. British Petroleum also pulled back into the mid 30s, around 36. Pay at least a 6% dividend. So I picked up some of those. Innsbridge at the beginning of the year was down around 32. They pay a fairly good dividend out of Canada. Energy Transfer, same way. They were down in the $11 range at one point, pay pretty good dividend. I think it's around 9%. General Mills, the beginning of the year in January of 2019, was down around $39, $40, so I bought some of them. Kraft Heinz, they, at the beginning of 2019, they had some issues with their financial reports and stuff like that, and they replaced the CEO, and they pulled back into the mid 20s. Bought some at the higher price, and then as they pulled back, I was buying them. They pay still a pretty good dividend. Royal Dutch Shell, normally they're in the 60s, mid 60s, but they've been pulling back due to oil prices and stuff like that, oversupply of oil. So they were down in the 50 range, which is a good buy because they pay at least 6% dividend. And the same thing with Valero. They've been as high as in the like 120s, and they pulled back into the low 80s, and so I picked some up there. And then ExxonMobil was pulling back into the upper $60 range. They pay almost a 5% dividend. It says high 4.9. So I bought some of those. But so I was trying to, buy good companies with fairly high dividends, considering a lot of stocks are only down around the 1 or 2% range. So I was concentrating on the 5 or 6% range. Now, one thing I did with Innsbridge, ENB, I was holding it in a taxable account, and then when I started getting dividends from them, I noticed I was getting hit with a 15% Canadian tax, and then I read up on it and said that I found out that if you hold Inbridge in a tax-deferred account, then you won't have the tax levied on you. And a similar thing with Royal Dutch Shell. There's Class A and Class B. The Class A is taxed, the B is not. So I moved my holdings from the A shares to the B shares to eliminate that tax. Alright, so let's take a look at 2019 and 2020 goals. So the S&P ended with a gain around 28%. The NASDAQ, which is a lot of tech stocks, ended up around 38%. The Dow was around 25%. My return was around 28%, which isn't too bad considering I had a lot of dividend stocks. They don't tend to appreciate very much. I received in all of my accounts around $15,000 in dividends, which I reinvested back into the underlying stock. So it was about a 3.15% yield. With my current portfolio and their current yields, I should receive somewhere around $27,000 in dividends in 2020 if I continue to hold what I am holding right now. So that would be about a 5.62% yield. So my goals for 2020: buy more dividend stocks when they go on sale. So you do that just by watching them, watching their price and getting to know what's normal and what's low. Buy more growth stocks. As you may know, tech stocks were up close to 40% gain in 2019. So I didn't get a lot of that gain because it was mainly in dividend stocks. So a lot of stocks I'm going to buy in 2020 is probably going to be more tech stocks, and I may do that via ETFs, which would be like Fidelity's FTEC ETF or something like that. I'll also look for high growth companies. Most of those tend to be in the technology area or biotech, looking for 10 baggers. And then continue to contribute to savings with probably around a 40% savings rate. In 2019, just to give you an example, I have two 401ks, my current one, and then for the company I used to work with, I still have that 401k. So the current one had around $329,000 in January of 2019. I contributed 31k, which came from the regular 401k, which would be 19,000, catch up 6,000, and then the remaining in this feature they call after-tax contributions that my 401k allows. So overall, contributed about $31,000 to my current 401k. Employer match around $6,900. Market gain of about $101,000. And so I ended up around $468,000 by the end of 2019. So not too bad. Now, in my previous 401k with my previous company, I started with $273,000 in January, market gain of about $43,000, so I ended up with $316,000. Now, that's only about a 15% gain. It wasn't the 28 or 30%. That one I've always been way too conservative in, even over the last 10 years, with too much in bond and fixed income funds. I'm kind of switching my mentality from now on to be more growth oriented, which may come back to bite me in 2020 if the market pulls back. But I probably missed out on a lot of gains over the last 10 years by being too conservative. So that's one lesson learned from investing. Overall net worth went from 1.2 million to 1.6 million in net worth. Not too bad. It was a good year. Now let's take a look at the S&P 500. If you look at the month by month gain, you see January and February did fairly well. April 3.9%, and then we had two pullbacks, one in May, which was then recovered in June, and one in August, which was pretty much recovered in September, and then everything else was pretty much up for the remaining months. That kind of goes to show you that when you have a pullback, it's hard to know whether it's a long-term pullback or just kind of a short-term pullback. That's what I wanted to show you about the S&P 500. The chart kind of gives you an indication over the last 2 years how the S&P 500 has gone. You can see the big dip by November and December of 2018, and then starting kind of the last week of December and into January 2019, it recovered, and you can see the little pullbacks, two pullbacks during the year, and it's been going up pretty steadily since then, probably based on interest rates, low unemployment, and the China deals kind of getting worked out. So right now everything's fairly positive. The last thing I wanted to show you, this one will be hard for you to read on video. It's kind of a summary of all the stocks that I own across all of my accounts. I kind of have it all summarized, and then I calculate how much dividend each of those companies pay, how much I actually got, which is over on the rightmost columns, how much I got in each quarter from those companies in dividends, and then the total, which would be the last column. So overall, last year I got about $15,000. This year I would expect to get around $27,000, based on a cost basis of around $483,000 for stocks that actually pay dividends. My overall portfolio cost is $543,000. So of all the stocks in the list, $543,000 in those stocks. The cost of the stocks that pay dividends, $483,000. So when I calculate my rate of return, I'm really just calculating it on the stocks that pay dividends. Just want to give you a quick look. One thing to be aware of with stock that pay dividends is sometimes it takes a while before you get the dividend after buying the stock. You buy them and then you wait for the dividends to come. Sometimes it can take up to 5 months before you actually start receiving a dividend. All right, everybody, I just want to give you a quick look at 2019. Visit my website, visit my Twitter account, Instagram, Pinterest. If you want to sign up for one of my affiliate links, go ahead. But overall, I'd like to have you subscribe, click like, and put any comments below and give me some feedback. All right, till next time. See ya.